Yeah, it shows live now.
Just a second. I'll just check. It shows live. I'll just check once whether it is broadcasting or not. Yes, sir. It is broadcasting live. You may go ahead.
Fine. So good evening, everyone, and welcome to this study circle meeting of the Hyderabad Study Group of the Chamber of Tax Consultants, Mumbai. As you are all aware, the thought of conducting this meeting started from a query from a fellow member on the WhatsApp group regarding taxability of or the TDS on the sale of immobile property under Section 195. And we observed the core team that there were divided views on the WhatsApp group. So we thought it would be a good topic to choose and do something which we had been planning to do for quite some time. At the Hyderabad Study Group, as you're aware, we have been having two types of meetings. Initially, we had only the study circle meetings where we choose a topic, we invite a speaker, and all of us participate in the discussion. Then we realized that there was some topics, for example, MLI, then the present FEMA course, where we needed more exhaustive study. So we have also added on to the topics of the method of having a long duration courses, especially 2 GST courses we had on a long duration method. We had FEMA and one on MLI. So we have now back to the study circle mode, because that is where the actual discussion happens and we have more participation from the members. So it should not be a lecture sort of a meeting. And that again was a feedback from our fellow members. So accordingly, we thought this would be a good start to go back to that study circle mode. So what we plan to do at HSG going forward is we want to have at least one study circle meeting every month. And for doing that, we invite members to suggest topics and also to volunteer as the lead speaker. We will definitely have a chairman. For example, today we have Mr. Rajendra Prasad and one more,
Raghavendra.
Mr. Raghavendra as the chairman or the lead speaker for today, but I'll just do the brief introduction. So before we go into the proper subject, I want to share this worksheet of our core team. So we, as you're aware, we are 7 core team members, and we have decided on the topics which each one will be coordinating. So if as a member you have any suggestion or if you want any particular topic to be chosen, I would request you to take a picture of the screen and contact that person. If you have a topic on GST, the right person would be Maninder. International taxation, myself. Information technology related issues, Neeraj Kapasi. Motivational and inspirational topics, Radhika. Income tax, Rammurthy Tejur Murtula. And company law and FEMA, Ravi. Sambamurthy is all-rounder. He can be contacted for any and every issue, especially he is the honorary treasurer of HSG. So any membership related issue, he is the right contact person. So these are the people whom you can connect with to ensure that some issues which you have facing in real day-to-day practice is taken up. So with that brief introduction about HSG, I'll move to the, so the today's structure is that I'll just briefly show a few slides which I have prepared on the topic of Section 1, applicability of Section 195 to capital gains arising out of immobile property. So I'll take about 15 to 20 minutes, not more. Beyond that, we would request each participant to please unmute himself or herself and voice their views on the meeting. Finally, we'll request the 2 chairpersons to give their final opinion on the topic. So with that, I'll move on to the slides which I have. I hope you're able to see this.
No, because Excel sheet Excel sheet close kar do.
Yeah.
You'll have to stop sharing and share again, Nilesh.
Yeah, I'll do that. So you're able to see now?
Yeah.
So today's topic, just to reiterate, Section 195, we are restricting ourselves to applicability to capital gains arising out of immobile property and nothing else, because otherwise it becomes a too big a topic to discuss within 2 hours time. So I'll just briefly read out Section 195, subsection 1. Other sums, any person responsible for paying to a non-resident, not being a company or a foreign company, any interest not being interest referred to in section so and so, or any other sum chargeable under the provisions of this act. Now, this is going to be the heart of our discussion today. Sum chargeable under the provisions of this act, not being income chargeable under the head salaries, shall, at the time of credit of such income to the account of the payee, or at the time of payment thereof in cash, by issue of check, mode of payments, and so on, whichever is earlier, deduct income tax thereon at the rates in force. So this subsection 1 is going to be crucial for our understanding. So I'll just repeat: payments to a non-resident or a foreign company of a sum which is chargeable under the provisions of this act, and then it goes on to say that at the time of payment of such income. The word income is being used here to denote the sum chargeable under the provisions of this act to the payee, and deduct income tax at the rates in force. So why I'm stressing on these points is, we'll see it down the line. 195(1) has a proviso, provided that in the case of interest, and I'll skip that part, which is not relevant for our today's discussion. We also have explanation 1 to section 195(1). The only point I want to make here is, here also the usage of the language is or other sum, then it goes on to add such income. So what it is trying to denote here is, the other sum refers to the nature of payment. Unlike other sections from 192 till 194L and so on, where those sections are applicable to specific type of a payment, 195 applies to all types of natures of payments. So that is why it is referring to other sums and interest compared to interest and salaries, which it is trying to include or exclude. Then it says such income and goes on to explain what it has to be done. So if we read this in totality, income is what is being stressed, is the point I'm trying to make here. So this is also talking about all persons. This was that Vodafone judgment, impact of Vodafone judgment, that whether you are two non-residents also are getting covered. Now, from the WhatsApp discussion which we had, most of the members were saying that we should refer the item to the assessing officer. Only then we should issue that form 15CB, or the TDS should be deducted. So let us look at 195(2), what it says. 195(2), where the person responsible for paying any such sum chargeable under this act, other than salary, to a non-resident considers. Who is to consider? The person responsible for paying has to consider that the whole of such sum would not be income chargeable. So suppose there is a sale of a property for, I've shown some examples, not entirely it is going to be liable to tax. Only a portion of it is going to be liable to tax. So on that basis, our fellow members were suggesting that in the case of, it is getting covered here, in the case of the recipient, he may make an application to the assessing officer to determine in such manner as may be prescribed the appropriate proportion of such sum so chargeable, and upon such determination, tax shall be deducted under subsection 1 only on that proportion of the sum which is so chargeable. To summarize, what it says is, whenever the person making the payment has a doubt that the entire amount is not liable to tax, then that person should apply to an assessing officer to determine what portion of that payment is income, and then deduct tax accordingly. So I've just used that phrase here in a sort of an example. So what we need to consider as a payer is whether we have to sort of look at the computation of the non-resident, what is the sale consideration, index cost, capital gains. So what we need to decide is whether this sum chargeable to tax, is it this 100 rupees or is it 20 rupees? So that is the moot question for today's discussion. What is sum chargeable to tax? Is it 100 or the capital gains of 20? Now I've just compared this. This is the example of capital gains, which is our today's topic. Just for comparison, I've put this slide where I've taken the case of a business person. So there will be sales, there will be cost of sales, there will be expenses, and then they'll work out at a profit. So let's say for this purpose of discussion, I've taken the example, 100 rupees sales, cost of sales 80 rupees, 20 rupees is expense, profit is 0. So in this case, what is the sum chargeable to tax? Is it 100 or 0? That is what we need to consider. So I'll not dwell on that much. We'll leave it for the discussion to happen. Moving on to section 195, subsection 3. So this is talking about an application to be made to the assessing officer for lower deduction or without deduction. From the recipient side, 195.2 was by the payer, 195.3 is by the recipient, the payee. 4 and 5 talks about that procedures. So we'll skip that. 195.6 talks about the person responsible for paying to a non-resident or to a foreign company any sum, whether or not chargeable under the provisions of this act, shall furnish the information. So what all information to be required to be furnished is Form 15CA and CB. That comes under 195.6. So as you may be observing, it is only for information that these forms are being gathered. 195.7, again, this was, okay, yeah. So this is not directly relevant for our topic, but I have used it for only to make sure there's use of language. Notwithstanding anything contained in subsection 1 and 2, the board may by notification specify a class of persons or cases where the person responsible for paying to a non-resident any sum, whether or not chargeable under the provisions of this act. So here the phrase used is whether or not chargeable, shall make an application in such form to determine. Again, the purpose is to determine the sum which is chargeable to tax in India. So now we come to that discussion on what is sum chargeable under the provisions of this act. In our example, 100 or 20. So there are two judgments of the Supreme Court, Transmission Corporation of AP Limited, which was decided in 1999. The facts were APSEB, then that electricity board, made payments for machinery and 2 contracts for erection and testing and commissioning. So it was sort of a turnkey project where not only the turbines were purchased, but even the erection was being done by that vendor. So there were 2 contracts. There was one contract which was only for purchase of turbines and second for the works contract part. The payments were made without TDS. No TDS was deducted on either of the 2 contracts. The income tax tribunal held it in favor of the SSC, saying that only pure incomes would be covered under 195. So it was a very narrow interpretation by the tribunal. However, the High Court and the Supreme Court overruled that. What it said was very important. It was held by the Supreme Court that the language of 195.1 for deduction of income tax by the payer is clear and unambiguous and casts an obligation to deduct appropriate tax. So the tribunal deciding that there's no TDS required is wrong. But what it said is what has to be deducted is only the appropriate tax at the rates in force. In this view of the matter, the answer given by the High Court that the SSC who made the payments to the 3 non-residents, the 3 different parties, was under obligation to deduct tax. So the obligation was definitely there in respect of the sums paid. And the obligation of the respondent SSC to deduct tax under 195 is limited only to the appropriate proportion of income chargeable under the Act are correct. So it has confirmed what the High Court had held, that only a proportionate part of that sum, which is income, is liable to tax. This is another recent case of 2020 GE Technology, where the facts were that the importer, the Indian resident, was making payment for Microsoft software, which is shrink wrap software, standardized software. The payment was made without deduction of tax at source. The ITO held that it is royalty and hence that withholding tax should have been done. The High Court's decision was that moment, it was other extreme. It was taking the stand that moment you're making a payment to a foreign resident, a non-resident, you are supposed to deduct tax. So that portion, the Supreme Court overruled, saying that that the moment there is remittance and an obligation to deduct tax at source arises, which view stands hereby overruled. So the Supreme Court overruled, there were two questions being asked, whether TDS was applicable, and secondly, whether there is royalty or not. On the point of royalty, it sent back the issue back to the High Court for reconsideration because the facts were not properly analyzed. On the point of whether tax has to be deducted, it said it is wrong to say that on the entire amount you deduct tax. So this also is in view, support of the view that only appropriate proportion should be deducted. TDS on that. So these are some paragraphs which I have quoted. I'll leave it for the members to go through on the WhatsApp group once I post this PPT. This is one interesting tribunal judgment which I got only today from Bangalore Tribunal. This was case which is directly relevant for our discussion today. The vendor was an immovable property owner who was a non-resident. One of the 2 or 3 owners was a non-resident. That non-resident had already purchased the residential property in India out of the sale proceeds of this immovable property. So according to the provisions of the law, Section 54 exemption was available to the non-resident. So it was held, the facts indicate that from the date of payment, on the day the buyer was making a payment for that purchase of immovable property, that day itself, it was very clear that the payee, the non-resident seller, was entitled to exemption under Section 54. Therefore, it was held there was no need to deduct taxes from the sale proceeds of that immovable property. Going to say that the payer can also go to the extent of evaluating whether the recipient is entitled to Section 54 exemption or not. So these are the 3 judgments which I had. These are some miscellaneous provisions. I'll skip that for the sake of time, because these are only this one's last slide. What we need to discuss today is we have the Supreme Court judgments in our favor. So first of all, whether you would want to go in line with that, or you have some different opinion, or you want to distinguish on some facts, that is one point for discussion. Apart from that, can I stretch it to beyond certain things? Can I say, in that second slide, can I say that as a payer, I'll go into the P&L account of the recipient, Indian P&L account, and say that he's earning losses, so I'll not deduct TDS. Can I stretch it to that extent? Second point for discussion is, if suppose Section 50C is applicable to that property, that deal, can I go and substitute the sale consideration with 50C and do a TDS accordingly? Or should I mandatorily go under 195(2)? So these are the 2 points which I am not clear about. So I thought I'll throw it open for discussion. So that's all for now. I request all the participants to share their point of view so that everyone is benefited.
I request Rajan Prasad and Raghavendra to unmute themselves, and whoever other people speaking, you just unmute. And my request is, whoever is not speaking, kindly mute themselves. Ajay.
Samba, if you are the admin, you can mute all. You can mute all, and I would request the speakers to unmute themselves.
Samba sir, you have to unmute yourself.
Okay. My request is, all the other people who are not speaking, especially Ajay, you have to mute yourself first. Ajay. So all other people who are not speaking, please mute themselves.
Let us do one thing.
And whoever is speaking, except Raghavendra and Rajan Prasad, no other person should be unmute mode. If you want to speak, you are most welcome, but one after other. So the floor is open. Raghavendra and Rajan Prasad can moderate the issues, and you can also throw issues. Already Nilesh has thrown 2-3 issues. You can also throw some more issues and seek opinion. Take one issue and you moderate.
Let the discussion happen, sir. After that, we will see it and any other things, I believe.
So can I start or else?
Yeah, sure, please.
Yeah,
Because before this thing, I want to share some practical experiences. What we need to see when we are going for deduction under 195. 2 years back, one client came for selling the property. Our people told that you have to pay the taxes on the net only. So you deduct it. We will deduct TDS on this thing, and subsequently we will get the refund. And we have calculated the TDS at the rate of 20 plus surcharge plus education cess, and we have deducted and paid the taxes, and we have closed the issue. Then subsequently, the same client, the TDS was deducted in December. She came for filing in April. At that time, newly the passport and days of residence was necessary. When we computed, we came to know she was resident. And when we asked how you told you are non-resident, she told I was staying in America since long time. That's why I told I am non-resident. That means taking the word of the client, don't go to the conclusion, jump to the conclusion, she is non-resident, start deducting. So if the fact was known that she was, if you had computed whether she is resident or not, she would have been deducted only 1% instead of 20 plus surcharge and everything. So these type of mistakes we do practically. So immediately don't jump to the conclusion. Don't believe the client immediately stating that yes, you are. If you are not, they will tell you. Sometimes residents will tell they are non-residents. Sometimes non-residents will tell they are residents. But we need to take the residents and we have to compute. This is one of what I wanted to share. My experience I am telling. Second is, this is deductor or deductive both can apply. Deductor or deductive both can apply. So what happens here, we should always check where they are assessed. Where they are assessed. If you are not knowing, then it will be a problem. Because if deductor is applying, where is assessed? If he is in Hyderabad, then he can very well apply to Hyderabad officer, international taxation. If the deductee are not assessed in Hyderabad, and if you are going to apply in Hyderabad, you will be facing lot of problem. I have to roam with the department for more than 6 months for getting a clearance. Conservatively, I told it will take 1 to 2 months, but it took 6 months. And that fellow, that client, since 6 months from Switzerland, he was following up that what happened to this thing. And here, practical problems, everything we have to bear on our head. Once we have taken the burden, we have to contact Hyderabad office, we have to contact Delhi office won't respond anything. And we have to engage some person in Delhi for following it up. If it is not over, then we have to catch hold of some person who is working in Delhi department. Then all these things we need to, so we should be very careful. Where is the jurisdiction is more important. To whenever a 195 case comes, you please go through the actual jurisdiction of deductor and deductee also. Then third one is this section 195.2, what the group told is whether it is on the gross or net. As far as I am concerned, my view is that it should be on the net only, but you are permitted to give deduction up to the stage of cost only. Whatever purchased, it is evidenced by purchase deed and its indexation. No further exemptions and all we cannot do. It is to be decided by the assessing officer only, because exemptions are, you are not the correct person, and whether he has invested or not is subsequent, not prior to investing in the property. If you are having further, he has invested 1 year prior also, even if he is eligible, this authority is vested with only assessing officer and not with the auditor. Auditor at best, as per my view or my understanding, is restricted up to the extent of the cost only, not beyond. And as I was also under a conclusion that it should be on the any sums payable, but subsequently I got clarified that it is any sums chargeable to tax. Then from that day onwards, I also changed my view and I am restricting myself. And the latest I am telling, in the Corona period only one case came. There they were pleading that we will be investing that 50 lakhs in the capital gains bonds. So you don't deduct TDS. I told we won't take risk. We will give you exemption only to the extent of the cost, not beyond that. And that risk we are taking, this risk you take and we deducted. This is what my view to start the discussion. Any other person can share their views.
Thank you, Mr. Sambumurthy. We'll go to Mr. Taraknath. He is unmuted. So,
No. I did not.
You have anything to add?
No.
Anyone who would want to speak up can just raise their hands, no, through this.
Yeah, sure. Ravi, that is enabled. Raise of hand doesn't appear on my screen. Is it enabled there?
Or at least they can give in chat, sir. They want to speak.
Yeah, sure. There's one item. Or it will go in the order of what they are appearing here.
That is better,
Yes.
sir.
Yeah, because
Yeah, correct, sir. You keep unmuting person.
Yeah. Ajay Bikinelli.
Nilesh,
Yeah.
Nilesh,
Yeah.
that raise of hand will participants is there na? If they click the participants, there they will find the raise of hand.
Okay. So there's no one who has raised the hand, right?
That we have to see.
No, it's yeah. So I request Ajay Bikinelli to please give the views pro or con. Are you there?
No, if they have anything, they will tell Nilesh.
Okay,
Others,
fine. We have Mr. Anand Kumar Ganeshwaram from Karnool, right? Karimnagar.
Yeah,
So
yeah.
can we have your views, Mr. Anand Kumar?
No, sir.
So what is your view? Is it gross or net?
I think it's a grass only, sir.
Okay.
Yeah.
And why is that?
View it is grass only. Actually.
On the entire sale proceeds?
Yes, sir.
Okay. So you don't want to take chances?
Yes, sir.
You-
Even, one of my cases I attend the same thing, sir.
Okay.
And during the discussion with the IT department also, they said it is only grass.
Okay.
Yeah.
Fine.
Hello?
Sarang Shah.
Hello?
Sarang
Yeah,
Shah here. I want to talk.
Yeah, sure, Sarang.
Please.
Yeah. What I have been basically doing is whenever my client is getting TDS deducted, I am putting up a front that, okay, it has to be on income. And whenever my client has to deduct TDS,
Okay.
I am getting it done on gross.
That's
That is
very
first
convenient.
part.
Yeah. Okay.
Practical way.
Second part is that when I look at 195.1, this exclusion of head salaries is there.
Right.
Suppose it was not excluded, then what is the amount on which I would have deducted tax?
Okay.
It would have been definitely on net. It would not have been on gross salary. This
Right.
is what my view is, just because most probably if I am paying to a non-resident a salary, if he is there for a period of time which is eligible legally for him to be here, then he would be staying somewhere, and then there is some cost to it. If it was kind of residential unit which was being paid by him, and maybe there was some deduction available to him, and I
Right.
would be taking up net. But
Right.
that is excluded from this whole 195.1. Therefore, maybe that discussion will not come up. So what I do is I go to clause 7. If I go to subsection 7, it says that if
Notwithstanding.
I have to deduct a higher or a lower amount, I need to apply for it to decide what is the proportion of sum chargeable?
That is 195.2. 7 is to be
195, 7
specified.
also.
Yeah. 7 is where it is
Say,
specified.
notwithstanding anything contained in subsection 1 or subsection 2. That means it's a non-obstante clause.
Right.
The board may, by notification in the official gazette, specify a class of persons or cases where the person responsible for paying to a non-resident shall make an application in such form and manner to the assessing officer to determine in such manner as may be prescribed the appropriate proportion of sum chargeable, and upon such determination tax shall be deducted at source and so and so. Okay. So now it means that if I have to deduct at a lower rate or a different rate, or if I have to decide on sum chargeable, most probably to those specified persons as per notification, they have to apply. Does it mean that for subsection 1, the same idea is to be adopted with regard to sum chargeable? I feel that is so. Most probably, if I go with the whole reading of the section, if I have to deduct on a lower rate or a lower sum, most probably I have to apply for it. I cannot decide on my own what is the appropriate sum, because I am a purchaser who is deducting, and a purchaser might not have a proper rate for the non-resident. I'll give you a small example. A property document only happened, and my client was a non-resident lady, and we calculated the taxes, and we said, okay, even if you want to deduct on the full amount, please deduct, because they came back to us stating that we will deduct on full amount. But we applied the rate of surcharge at 15%, because that was what actually was happening to us, that 15% was eligible after deduction of cost. So we applied 15% surcharge. The party who purchased came back to us stating that, no sir, you told us we deducted at 15%, but our auditor is saying it should be 25% surcharge. They claimed this amount and paid, and also claimed the interest from us. Definitely our NRA client paid the interest also. But the idea is that if somebody insists on this amount of payment on full amount, nobody can deny it. If I want to say that, yes, sir, I am taxable at a lower rate, let us say I had some other expenses also, I had some losses in long-term capital gains, and then I wanted to set it off, my income would have been more lower than what is apparently available. And I would have to definitely apply to the income tax department, because other transaction would not be considered by the purchaser at all. They don't know what is my other income or other loss. So in the corollary, if there was other income also, if I had sold 2-3 more properties and I was going to a 25% surcharge rate, and I was only getting deducted 10% somewhere else, I would keep quiet and that fellow would do it, and I would not inform him. But suppose I was looking at the taxation and saying my whole of the taxation was very high, I was looking at a refund at a bigger proportion than what is thought reasonable, then I would say, okay, let me approach the department and get a certificate for this. So I would apply for that certificate. So even wherever I feel I have to take a decision on whether I should go for a gross sum or a net sum, I would rather go for gross sum. Maybe if the other party is okay with the net sum, if I am the seller, then I would say, ठीक है साहब, कम कर लो, net पे कर लो, and that is easy for me. So I would do that.
Here, one thing is there, Sadhan Shah has raised a point, whether it is a qua source of income or qua property wise, that means is it head wise or property wise?
Correct.
So I think we should, a purchaser should see from property wise only, not his total income or anything, because that is secondary. That's what I was telling. What is primary is, anyway you will be having the link documents for purchasing. Anyway, that cost he would have incurred when he has paid. That means it cost can never become any sum chargeable to tax. So that's what is my logic, and it should be qua property only, not qua source or qua head income or qua total income.
Okay.
This issue gains importance when the asset sold is a short-term capital asset. Because otherwise, no, you can go with 20% or the rate of 20%, you can go with it. But if it is a short-term capital asset, no, then definitely whatever is the rate that is applicable, it varies from person to person.
Yeah.
So there it gains importance.
Yeah, that's all. Even in short-term capital gains, what I am telling is, when you compute the capital gains, if it is short-term only, then naturally we will be deducting at 30% plus applicable surcharge plus applicable education cess. We are not stopping. Even 20% also we are putting the surcharge and education cess also. Both ways, whether it is short term or long term, when we are computing, what is our logic is, the cost is already incurred by the seller, which is not any sum chargeable to tax. Because if there is no cost, if it is inherited or anything, that we are not giving. But when some cost is incurred, that indexation surely will get. So to that extent, but further investment in any 54 or 54 EC or anything, that we are not considering, because different views are there. Our approach, and Saranksha has very conservative and very practical approach, that when you are a seller, then you are ready for net, and when you are a purchaser, then you want to go on gross. Very conservative. It reduces our legal encounters. That's all.
Yeah.
Sir, here one small point to add is that earlier the issue of fair market value is there.
Yeah.
Say it may be 1/4/1981 or 1/4/2001. People used to come and say that we have a different fair market value. I think that loophole is also no more available, because in the Finance Act 2020, whatever is there, whatever is more than the sale date, I think that is not available. So whatever is there as per the sale date or the document value, that only has to be taken as the cost. So I think that issue also is now put to rest. So ITers can comfortably think of the clients.
Okay.
Just,
so Rajendra,
yeah. So just okay. I want to clarify the introduction of, it means the rationale of introduction of 195.6 and 195.7, because just I observed Sarang sir comments. Okay, while his views are very much correct, but let me clarify the background of 195.6, 195.7. Then why under 195.1, 192 is excluded, so that you can take the more informed judgment. Okay. See, 195.1 it says that other than salaries, for the simple reason that, see, 192 and 195, they stand on the same footing, for the simple reason that 192 is a withholding tax, 195 is also a withholding tax. Okay, I will elaborate at last. Once again, I will conclude. It means I will summarize the various points once again. But just here, he pointed out 195.6, 195.7, and he talked about salaries. That's why I'm telling you. See, there is a difference between TDS and withholding tax. But loosely we misnorm them, and we say that, okay, having withheld the tax, I have done TDS, sometimes like that. But the main difference is, if the tax liability is deducted, that is called withholding taxes. 192, what we are doing, we will estimate the salary income. I'm talking about the salary income because the section itself talks about, don't tell any other losses except the IHP loss. Don't consider any other income unless otherwise the client, the employee gives. It means, as an employer, you take the salary income, examine that one, calculate the tax liability, deduct. So you are deducting the entire tax liability. When the entire tax liability is deducted, that will become withholding tax. 195 is also like that only. 195 also, what we are doing technically, we are calculating the tax liability. I'll come to net or gross at the end because I want to listen from the others also. I will summarize my views okay, at a later point of time. So 192, 195 both are that they are talking about withholding taxes. All other sections, they are tedious. Right. Of course, there are other sections like 194 EE also is there. 194 EE talks about when you are making payment to non-resident sportsmen. Very few cases. It means I dealt with one of the IPL cases. So they came and they asked, sir, at what rate we need to deduct TDS? The bunch of non-resident sportsmen, they came and they asked. So that I told, see, it is your income is taxed at 20%, TDS is also 20% because this is called withholding tax. Whereas 194C, 194I, 194J, you take any other section, they never talk about the withholding taxes. His income will be taxed or his tax liability may be different. But ultimately the rate 2%, 10%, 5%, something like that we are deducting. So there is a difference. That is the reason, since there is a specific section of 192, they have, the lawmakers have excluded from 195 the scope of 192. This is the only reason, sir. Okay. I hope that I'm clear, sir. Okay, why that has been excluded. Ultimately, the conclusion is same, right? Then what is 195.6 and 195.7? Remember, 195.6 is substituted, and 195.7 is also 195.7 is inserted on account of the offshoot of this Vodafone judgment. I will explain what happens there. 195.6 or 195.7. See, 195.6. If you see, sir, Nilesh sir, can you put 195.6, sir? Yeah. 195.6, sir. Sure. Yeah. So here it says that the person responsible for paying to a non-resident, etc., whether or not chargeable, shall furnish information payment, etc. So what it is talking about? This section is substituted after the LG case. In LG case, what happened was they are importing lots of consignments through ships. We know that when is import of goods, there is no TDS requirement, but if it is import of service, definitely there is a TDS requirement. So they are paying huge amounts to their parent company. They paid some towards goods. In that, they loaded some towards the services also. So, but apparently they declared, sir, this is the bill of entry value like that. And the Singh officer also felt that, okay, once there is a bill of entry and there is a shipping bill of entry and bill of lading, etc. So it is a genuine import and it is only towards goods, it is not towards services. That's why they felt that TDS is not required. But upon a detailed examination, they realized that whatever amount they paid, it is towards hidden cost of services also. Then they reverted 195.6. What they have done is, whether it is chargeable or not, you have to give information to department. Later on, there is a lot of hue and cry. Sir, if you are asking every information to flow into the department, whether it is taxable or not, etc., then it becomes a very onerous job. Then they linked for this one 15CA, 15CB, Rule 37BB is there. There are 37 payments where we won't approach the department, etc. They are given, they linked to 195.6 those provisions saying that these 37 cases or some whatever exclusions are there, no need to deduct TDS like that. All other cases you need to inform. So what they have done is they have introduced 15CC form. We know 15CA, we know 15CB also. What is 15CC? Every payment will be routed through banking channels only. So the banker is liable to give within a period of 15 days to department. For example, your banker is ICICI and you have imported certain goods. And since it is import of goods, it is not liable for TDS. But there's the banker has to file a return. 15CC saying that, sir, on behalf of this particular client, I have remitted this much money to the parent company or to the exporter, whoever on the other side. So the government is getting a track of all the sources of information, like, okay, these are the various sums which crossed the boundaries of India, like that. That is the purpose of 195.6, sir. That's why whether or not chargeable. So it is, so in that case, the banker is expected to give all the information to the government, whether we have deducted TDS or not. If there is a TDS, definitely there would be 15CR, 15CB, backed up by a chartered accountant certificate or a Singh officer certificate. In all other cases, anyway, banker is giving. This is the rationale of 195.6. Now let us see 195.7, sir. So next slide, sir.
Yeah, sure.
Yeah, notwithstanding anything contained in 1 or 2, etc. Okay, Saranksha has rightly read that out for the benefit of all others. But I will explain the rationale why 195.7 is introduced. See, in GE case, Neelesh sir has shown 2020 case. Neelesh sir, there is a 2010 case, sir, original Supreme Court judgment. There, the original remarks of the Supreme Court is, if the payer is fairly certain that it is not a sum chargeable to tax, then he need not deduct TDS. So everyone started saying that I am fairly certain I need not deduct TDS. Everyone started taking that interpretation because 195.1 uses the word chargeable. And 190 at that time, the Supreme Court gave interpretation that if the payer is fairly certain that it is not liable for TDS, then you need not deduct TDS. If really it has missed from the buckets of TDS, then it is for the assessing officer to recover. See, 195, it is only an accelerated method of recovering some taxes, as simple as that. To bring someone into tax net, later on we will collect the real amount at a later point of time. Obviously, 195, again I told you, it is a withholding. Most of the cases, the tax liability will be equal to the TDS deducted. In that background, 195.7 has been introduced, saying that notwithstanding anything contained in 1 or 2, it means chargeable or not, etc., etc., the board has been given a right. These are the specific, these are the notified cases. With regard to the notified cases, always approach the AO. Till today, because this section has been inserted, this has been inserted with effect from 1/7/2012. From that date onwards, no single notification has been made under 195.7. But the government retained the right with regard to certain payments. Always one has to approach the AO. This is the rationale for introducing 195.7, sir. That is the purpose. If you want, you can just go through the Memorandum of Finance Act 2012 to get more clarity on that. So over to others, sir. After that, I will explain whether it is gross or net, sir.
Thank you, Mr. Rajan Prasad. This was really, the background was really enlightening.
Yeah, sir. After that, at the conclusion, I will explain 195.1 to 195.7 rationale for introduction of each and every amendment also, so that it will be clear for everyone, including along with the judgments I'll give, sir.
Okay. So just to add to what you had said, sir, the language used in 192 and 195 is very similar. Both of the sections, they use the phrase sum chargeable.
Correct.
There it says sum chargeable as salary. Here it says sum chargeable to tax.
Correct.
Unlike these two sections, all other sections, they are specific by way of payment, by way of interest, payment by way of so-and-so. So the nature of payment is determining the tax liability under those provisions, whereas unlike here, it is sum chargeable to tax. That is why the computation comes into play. Otherwise, it should be on gross. So that is another distinguishing factor. Yeah. So we have one more person raising. It was Mr. Murli. Can you unmute yourself, sir, and speak? He has put some.
So someone has put in chat box about the DTA. I will cover that one also later, sir.
Oh, okay. Okay, fine.
I will cover that one.
Fine.
Raghavendra, you want to add anything?
Sir, if you permit, let us see this Supreme Court judgment, wherein I think most of the questions are answered.
Which
you want to share something?
Right.
Then,
yeah, sure.
Neelesh, you stop sharing so that Raghavendra will share something. Raghavendra, you can start sharing.
Sir, host disable participant screen sharing.
होस्ट रवि नहीं तो मेरे को होस्ट बना दो ना.
1 मिनट में सेट कर रहा हूँ सर. आप ऑलरेडी होस्ट है सर.
I am a host, so I can enable multiple participants can share simultaneously.
मैं enable कर दिया सर already.
ठीक है. Good. Raghavendra, your route is clear.
Right.
Yeah. PPT పైన ఉంది.
PPT okay. డైరెక్ట్ గా ఒకసారి
GE తీసుకోండి.
రాజేంద్ర ప్రసాద్ గారు మీరు కూడా కొద్దిగా సప్లిమెంట్ చేద్దరు కానీ.
సార్ షూర్ సార్, GE తీసుకోండి. అదే సామ్సంగ్ అయినా ఓకే సార్.
అంటే సామ్సంగ్
ఓకే రైట్.
అంటే we got more relief here కదా.
రైట్ సార్,
రైట్.
Then once it opens, you should stop that sharing screen. You should start sharing the screen. అంటే ఏదైతే PDF ఓపెన్ అవుతుందో అది చేయాలి.
రైట్. స్టాప్ షేర్ అని కొట్టాలా?
కాదు, ఇప్పుడు నువ్వు ఓపెన్ అయింది అనేది PDF అయితే స్టాప్ షేర్ చేసి మళ్ళీ PDFకి వెళ్ళి స్టార్ట్ షేరింగ్ చేయాలి. You will get multiple screens. You should select PDF, which is open.
Sir, you are able to see it, sir?
No. You have to share. Share screen anu ante నీకు మల్టిపుల్ విండోస్ ఓపెన్ అయితే అందులో PDF ని డబుల్ క్లిక్ చేయి. శర్మ గారు ఏమైనా మాట్లాడతా అంత లోపల? ఇప్పుడు ఓపెన్ అయింది, వస్తుంది, వచ్చింది ఇప్పుడు. We are able to see. GE కేసే కదా? ఓకే.
సాంబమూర్తి గారు
చెప్పండి.
చిన్న రిక్వెస్ట్. ఫస్ట్ లెట్ ఆల్ ది పార్టిసిపెంట్స్ ఎక్స్ప్రెస్ దేర్ వ్యూస్ ఆన్ ది సెక్షన్. ఓకే, వన్ బై వన్ మనం కంక్లూజన్ కాకుండా చేసుకుంటే బాగుంటుందేమో అని నా ఉద్దేశం.
సరే, మంచిది. Then for some time you stop sharing.
Right, sir.
Raghavendra, let us seek the.
Raghavendra.
Yes, sir.
Was Nilesh bhai?
Yes.
No, what my submission is, see, we have 7 subsections, right?
Yeah.
In under 195. And the crux of the issue is sum paid.
Yeah.
Right?
Yeah.
So let the participants dwell upon that. Then we can substantiate the views of the what you call moderators. No.
Perfect. But
that's all.
No, because he is only putting his view. Then the participants can ఒక పాయింట్ ఏదన్నా అబ్జర్వేషన్ చెప్తాడు, తర్వాత let the participants deliberate on that.
Perfect.
Raghavendra, are you going to raise any concern or you want to tell some explanation?
Sir, ikkada just you could see, sir, 7th para last, I think it is highlighted in yellow.
Yeah.
Fairly certain.
Please read.
Sir, from this they have made some analysis, and afterwards these are the concluding remarks. From this it follows that where a person responsible for a deduction is fairly certain that he can make his own determination as to whether the tax was deductible at source, and if so, what should be the amount thereof. Sir, I think this para is having some importance for the reason that if somebody be able to decide what exactly is the tax component or the proportion of the income that is liable for a tax, then they need not approach the income tax officer.
Correct.
So I'll be very happy if some of the participants throw light on this. Can we decide it? Who is going to bell the cat? The problem here is, if at all if there is any problem in this deduction, finally the buyer is going to be penalized. Either it may be penalty, prosecution, or whatever it may be. The buyer is going to suffer the consequence. Either it may be interest on section 201. All these consequences are for the buyer. So in the light of these provisions, if participants can throw some light on that, it will be very nice.
You stop sharing. No.
So can we have some raise of hands?
శర్మ గారు ఏమైనా మాట్లాడతారా? రామ్మూర్తి గారు గాని
చెప్తాను. Generally, what is happening is, we are limiting our discussion only to the property. Now, sir, am I audible, sir?
Yes, sir.
Yeah.
The basic discussion we are only limiting to the property sale only.
Yes.
what is happening is all the person who is to determine the capital gains, we are what I have done in my case is only the document value for acquisition cost and index, and that is being taken care. Instead of gross amount, we have taken only net amount based on the only document value. We are generally the people may say that I have added that I have some improvements which were not taken into consideration, because it may create some problem whether to prove and all those things. But otherwise they have to go for application to the, that's what it is clear for me. Even this 195 subsection 7, I feel it is only for a specific notification and not related to a general case. So normally we have to apply 195(1) and we have to go for TDS, but it's only specifically it is given as income. We can take a chance of how to compute a capital gains without any controversies.
Correct. I think
So
that's
otherwise we do not know to what extent we will be taking care of that.
Yeah.
This is what I was doing and I was advising that.
Perfect. 195(2) is available if you have doubt, if computation is required. So better to leave it to the officer to decide. So that's a safe proposition.
See, I can say this computation is always the prerogative of the department, not ours.
Right.
Because even 115, normal 15 CB, if at all we have to give, then there is a problem for us.
Yeah. Like Sarang gave an example, if there are some brought forward losses and all that, there we can, as a payer, we cannot enter into that arena.
Definitely not.
That is left
we
to...
cannot step into that.
Yeah. But I was surprised that section 54 was allowed in that tribunal case, Bangalore tribunal case, because we don't know how many properties that person owning already. So that area is again a gray area. Given a choice, I would say I'll not go that side to that extent. Yeah. Mr. Rajendra Prasad, you wanted to add something?
Yeah. Regarding that one, just why 154, the department has, tribunal has given favorable in favor of 54. I'll explain that.
Okay.
Okay. Let others listen. I have noted that point also. I'll explain it.
Yeah.
Yeah. Ramurthy garu, unmute and please. Your views.
No. Explanation 2 to 195(1).
Then Nilesh, you start sharing.
Yes.
If you want, I will read it.
Just a minute. For everyone's benefit, I'll show that proviso.
Explanation 2 to section 195(1).
Yeah, please.
For the removal of doubts, it is hereby clarified that obligation to comply with subsection 1 and to make deduction thereunder applies and shall be deemed to have always applied and extends and shall be deemed to have always extended to all persons, all persons, resident or non-resident, whether or not the non-resident person has a residence, place of business or business connection in India or any other presence in any manner whatsoever in India. Okay. So, through this explanation 2,
this is saying that this is for indirect transfers. Two non-residents are entering into a contract outside India for an asset which is in India. So 195 will apply to both of them.
Yes, boss. Yes, boss. Here, whether it is asset or not asset, that is what you call separate issue, right?
Yeah.
If you see section 195 subsection 1, any person responsible for paying to a non-resident, not being a company, or to a foreign company, any interest, not being interest referred to 194 LB, 1 LCR, 1 LD, or any other sum chargeable under the provisions of this act, not being salary, shall, at the time of credit of such income to the account of the payee, or at the time of payment thereof in cash, or by other modes, whichever is earlier, deduct income tax thereon at the rates in force. Right?
Yeah.
So rates in force, I feel are referred in Finance Act.
Yes.
While adopting the rates in force in the Finance Act that are referred, the relevant deductions or exemptions that are given shall also needs to be considered for arriving the taxable income.
Correct. So just to take an example and to support your view, if I'm applying 20% for long-term capital asset, 20% is on capital gains. I cannot apply 20% on the total sale proceeds. Correct. That's what you're trying to say?
So this is substantiated by 195(2), if I'm not wrong.
No, 195(2) is application.
That is what application only, because application, why I am trying to correlate here, the rates are given in the Finance Act, right? So while applying that rates, the corresponding deductions or exemptions or whatever it is available to the SSC needs to be considered, and accordingly the rates needs to be applied. This is what just I want to share, because I have read only 2 subsections and the explanation given.
Okay. Sure. So we have one Ms. Jyoti. She has raised. So I think Samba, you can unmute her.
Let her unmute. Huh? Now you are the host. You can do.
Okay.
You are the host now, without knowing.
Okay. Just a minute.
Now you can unmute her.
Okay. So Ms. Jyoti, can you please share your thoughts?
మురళి గారు ఏమన్నా మాట్లాడతారా?
పర్మిషన్ ఇస్తే మాట్లాడతాను సార్.
అన్మ్యూటే ఉన్నారు మీరు, మాట్లాడితే మాకు వినిపిస్తుంది, క్లియర్గా వినిపిస్తుంది మీ మాటలు.
Good evening, Mr. Nilesh.
Good evening.
Can you take me back to the section 195(1)?
Yeah.
The main section.
Yeah.
Yeah. Here we have got 2-3 important, words which are crucial.
Right.
One is sum chargeable. One is such income.
Yeah.
And the other is deduction of tax at the rates in force.
Right.
Now, what is the definition of the word sum chargeable? Is it the same thing as the income which we are referring to? Are we referring to the total income, or are we referring to the income arising out of the sale of this property? Today's conversation is only, the debate is only regarding the capital gains on sale of a immovable property.
Yes.
So are we going to say that this income which we are now reading in this section relates to the determination of the capital gains arising out of that sale?
Right.
One. 2, is this income related to the word used as sum chargeable? Now, if the word sum chargeable is to be understood as the word income, the word income is to be understood again from the deeming, from the section 5 of our Income Tax Act, which is the charging section.
Right.
Now, the charging section says income is always net of anything,
Right.
which is what you have also explained in your presentation about business expenses.
Right.
Right? So therefore, here also, going by what Mr. Samamurthy has said, we need to take the net of the sale consideration sans the exemptions.
Okay.
We could also take the exemptions into our consideration, because one of the explanations, section 195 section says, whosoever is authorized to determine the income for himself. The question would be, only when there is a issuance of a notice to determine whether the capital gains has been properly arrived at not in the hands of the payer, would all these questions be arising.
Right.
Prima facie, when you are determining your total income, if you are confident that the words income and sum chargeable are with respect to the determination of the capital gains, and you are confident that this is the capital gains which is subjected to tax, I pay the tax, I deduct the tax accordingly and remit it to the government in the name of the non-resident. Only in the case of assessment of this purchaser would all the other factors be factored in.
Okay. So in that case, yeah, sure, please.
Continue, sir.
So I had a doubt. So at what point would you stop? Would you stop at capital gains? Would you stop at sales proceeds, capital gains, or let's say brought forward losses, or section 50 for exemptions? At what?
No, I would put it only at the net of the transaction without going into the other aspects, because bringing forward the brought forward losses is all computation of total income. We are not talking about total income here.
Okay.
We are not talking about total income.
Right.
If you are talking of the total income, then so many other features will come into the picture.
Okay. So qua the property.
Qua the property only, we have to confine ourselves only to the qua of the property.
Fine. Section 54, you'll go to that extent or not?
If I go to section 54, it's again a question of making an exemption, which is part of the computation process. I also concede, but that is again a question of the conversation or the dialogue between the assessing officer and the SSC.
Not for the payer to decide.
Not for the payer to decide.
Okay.
This is one of the speakers has said, let us not go into even the cost of improvement. He only said, let us confine also to the cost of the purchase document. Rest of other things we can determine during the computation of total income into all these things.
Right.
While filing the total income of the NRI, of the non-resident, you can perhaps do any of these calculations. But for the purposes of deduction of tax at source, I would restrict it only to the net of the transaction. Qua the property only.
Got it. Okay. Followed, sir.
That's my viewpoint, sir.
Sure. Thank you. Thank you, Mr. Murli.
I would want to make one point.
Sure.
We are all saying that cost of improvement should not be considered. Now, let us consider a situation wherein a person bought a plot and then he built a house on it. Now here, the cost of purchase would only be restricted to the cost of the plot, which can be, no, I'm saying cost of purchase, which we are all considering right now.
Right.
But the cost of construction can be equal to the cost of purchase, and that might double the indexed cost of acquisition over there. So in those cases also, should we not even take a reasonable amount of cost of construction while calculating the capital gain?
Brother, the question here is whether we are in a position to substantiate the expenditure incurred for cost of improvement at a later point of time without getting into any more litigation. If you are confident of saying that, yes, I have spent 100 rupees on this leveling of the land, and you have bills to prove that, please go ahead and claim the cost of improvement. But if it is going to be a debatable issue, I would recommend, I would suggest that let us not get into that arena for deducting the tax at source.
No, Ravi, what sir is telling is correct, because I have practically faced such type of things. Because the assessing officers are invariably asking the proofs for the additions. In my case, what happened, land was purchased, then a building was constructed, and in that building there were improvements in the form of other extra fittings and all. The officer was asking, where is the proof for all those things? So you don't maintain for construction. So we could, maximum what we could do is we could submit a valuation report, and he took only to the extent of valuation report, no other extra things he has considered. So these are practical cases what sir is telling. If you are having the proofs of cost of improvement, then you can go ahead. If you are not having, it is better to take reasonable, and what is reasonable only assessing officer will tell, not ourselves.
So as a payer, my next doubt will be, as a payer, should I go to the sources or only invoices are good enough?
No, invoices only.
As of my invoices, Nilesh bhai.
Okay, I can't be the assessing officer and ask for sources.
No.
Yeah, then we'll get into that. We will be going to a bigger limbo.
Okay.
Sir,
we'll be going to a bigger limbo
the source is something that gets taxed under 68. So it has nothing to do with 195, no, sir.
Yeah. That's valid point.
So cost is
we will be going into concentric circles, brother.
Okay. Fine.
Ms. Jyoti.
So, I think, yeah, Ms. Jyoti has never spoken. She has quite a few points and very interesting points. So can you please unmute yourself and inform us what is that you want to say? Ms. Jyoti?
She is not able to unmute herself, I think. You just unmute, no?
Okay, here also, I think it's...
Jyoti. She is after Hyderabad study group.
Yeah. I'm not able to see her here.
No. She is after just got on Jyoti Panangi Palli.
Yeah. I'm not able to unmute her. Yeah. Jyoti, can you please, you were on mute. Can you please unmute yourself? Yeah. Now you're on audible. Can you please share your thoughts?
I am on Satyanarayan Murthy here.
Okay.
Yeah. Basically, I would like to take a safer stand of doing the TDS on the gross amount, because right from 192 to 195, as I've said here, 192, 193, 194A all talk of income. So income, again, we go back to section 5 and then determine what is the income. 194 talks of payment. 194C talks of any sum. 194J also talks of any sum. So, but 195 is the only section which talks of any sum chargeable. So none of the other sections talk about any sum chargeable. They say here 195 is the only one which says any sum chargeable. So here I would not risk even going by the definition of taking a chance of deducting the cost and then arriving at the income, which is actually that per se only the transaction property only, deduct the cost and then arrive at the taxable amount, net amount, and pay the do the TDS. I would go by the safer route of, because the words are very, any sum chargeable, then he says such income. So he is concluding that the sum chargeable is income per se. There is no leeway there. The maximum risk I would take is deduct the cost of the property. That is one. Second is, okay, when we say deduct income tax at the rates in force, I would go to DTA if at all any leeway is there for me to deduct at a lesser rate. If it is not there, go by the rates 20 plus, whatever it is. That is my view.
As far as, just to add to that, as far as immovable properties are concerned, all DTAs will say that you refer to the domestic law provisions. So we come back to
whichever is beneficial to him.
Yeah, so there's no rate prescribed under the DTAs for
Yes.
capital gains.
Yes,
so we have
yes.
to fall back again on the Income Tax Act. Unlike other
Nilesh,
passive incomes.
So, Nilesh, sir, can I interrupt
sure.
for this?
Sure.
Sir, in other sections, they have 194J, 194H, they have specifically said that it is if you pay rent, if you pay professional fees. So it is not income there. So that's why we are taking gross there. Here, in this section, it is income.
Right.
And 192 also income. But whatever payment made towards rent, towards professional fees, so there is no such deduction or nothing income wise. Whatever payment made, it has to be deducted.
Yeah. Right.
So that cannot be compared with those sections and this section. That's what my understanding.
Fantastic. Correct.
So I'll unmute now.
Yeah, sure. Or what Mr. Sharma is saying, that wherever the Act wanted the rate to be applied on gross, it was very clearly stated, right from 193 till 194J all, that on the nature of payment, if you're paying rent, if you're paying interest, deduct 10% on gross. But when it was asking you to deduct on some chargeable, you automatically have to go to the machinery provisions and calculate the income. Correct, Mr. Sharma? Yes, someone has raised a hand. Mr. Murli has raised the hand, right? You please unmute yourself and speak, sir.
Yeah.
Yeah, please go ahead.
Like like I said, I would go by the safer option.
Yeah.
Because now, with my experience, the refunds are also coming. Even if there is a gross amount, the refunds are quite fast. So there's been no hassle.
Yeah.
International taxation, those people tend to pick up and then want to go do a little more digging. But then I think on the whole, it's not been a problem to get a refund of the excess amount that has been paid.
It's
And
a
we
factor,
see
no?
that
So
most of
I
these
would like
NRIs
to,
are only
I would
having
like
this
to add,
income.
I would
There
like
is
to
no
add
other
my
income.
experience over there. One of my client lost around 1 crore of amount. He has been pursued. We've been pursuing with the department for 2 years now. The department has been beating around the bush. The refund has not come till now, despite the government giving a directive that all the pending refunds should be issued immediately during the pandemic. Still, we have not been able to get the refund despite submitting all the relevant documents and establishing that the TDS amount should have been much lower than what was actually deducted.
right, that's a major issue. And one more thing could be, suppose the transaction happens in April. I file the return, I am the seller, I file the return only in July next year, and then 6 months or a year from there. So it's almost like blocking my money for 2 years' time. So I would say that shouldn't be the way. We should look at what is the legal stand, or what is the correct legal interpretation. So yeah, Mr. Murli, you have raised a hand.
Yeah, Mr. Nilesh, we also have to understand it from this perspective that the purchaser has got an option. If he is confident of determining the income chargeable to tax, he could deduct the tax at the rates in force as per his calculation. Lest he has a doubt, only then he will resort to making an application to the department, to the assessing officer to issue a certificate at a lower rate or at a nil rate. So this is not a mandate for any purchaser that he must seek the opinion of the assessing officer to determine the rates of tax. It is his option. If he is confident of proving the cost and the profit arising out of the sale of the transaction, well, he can, just deduct the tax and be done with it. The option will come only if he has a doubt,
Right.
either by himself or by the purchaser.
Right. So whenever there is a doubt, you have to fall under 195 too, because
Yes,
if
sir.
consider,
There is no option thereafter.
yeah, if the person responsible for paying considers that some part only is liable to tax, then obviously 195 too is squarely covering that.
Yes, yes.
But in case of a capital gains on immovable property, I have a document, which is my own linked document, as Samba mentioned. So I have a document, I'm the purchaser, I'm seeing what is the cost, date of purchase. Today I'm buying, so I know my sale consideration, which I'm paying. Indexation is very easy to determine. In case of such a simple transaction, there's no doubt in my mind, personally, that I should follow only capital gains, not the gross sale proceeds.
Nilesh?
Yeah.
It's already 6:20. More 10
Yes.
minutes we will have deliberation.
Yeah.
Then last half an hour we'll leave to the both moderators or group leaders for
Sure.
their final conclusions. So that
I have one more point to say here. Can I take it?
yeah, please.
See, I have of late, I've also seen where this NRI comes down, sells the property and is able want to take the money off out of India. There's a risk here in trying to sit in the seat of the assessing officer and determining what is the sum chargeable to tax. Okay, so even the banker is now doing his own computation and saying that this is the sum on which tax should have been paid and this is the money which can be taken out by him abroad. So there's an element of discomfort here. Sorry. There's an element of discomfort when the banker also steps into the shoes and starts questioning your calculations. He says, no, only the gross amount should be chargeable to tax. TDS should have been done on that. So there is an amount which is left untaxed. Only that amount net amount only can be taken. I've experienced this with SBI.
Okay.
No, SBI only is doing all this nonsense, sir. Because one of my client had to send money abroad. The 15 CA, 15 CB we have given because he was sending it as a gift to his son and it is all tax paid money. But the banker was insisting that it should be documented in a sub-register office. And before that, he has not reached unnecessarily. The sub-register was also telling there is no gift deed registration for movable property in the form of cash. In spite of that, the banker never listened, but due to urgency, my client was forced to send the money. So he had to register, because the SBI people are very adamant. They are still staying in the year of formation only. Either they are formed in 1949, they still feel that they are in that year only. They are not developed to 2020.
In fact, I've had to submit the documents of the purchase document, the sale document also had to be submitted to the SBI to convince them about the calculations.
Sarang here again. See, I similarly had an issue where, I mean, obviously for...
Yeah, please go ahead.
Obviously for payment of or for repatriation of funds, you got to give the details to the bank on have yourself. But when I went to a income tax officer, he says that, okay, you will give 15 CA, 15 CB and repatriate the money. You will calculate the capital gains eligibility for the seller who is not your client, or even if he is your client, who gives you this right of calculation? So I say, sir, if it is not taxable, because it is obvious that in a capital gains case, he has purchased the property in India and it's allowable for deduction. So he says, what is allowable, what is not allowable, you leave it to me, because I am the assessing officer. If you want to step into the shoes of the assessing officer, you go to subsection 2. You come back to me, then I will see what is there. You cannot sit and decide on the taxation part also. Okay, you are giving 15 CA, 15 CB, you are stepping into my shoes there because you have been given a right. If you are in 195, come to me under subsection 2.
So, Sarang, you're saying we should not apply even the cost. 100 is the sale proceeds, apply 20% on sale proceeds.
I would rather go for it if my client is deducting TDS. I would go for the whole.
I have one more point here. See, 195 is a 195.2 is a very dangerous section in the sense the moment you go to the assessing officer with he will not look at the property sale only as an isolated transaction. Now he'll say, what is your other income? He is going to go into the total computation of your income, and then again we are going to lead him to so many other things. So 194.2 I would say the last resort in case we have to go. Yes, please.
Yeah. So I think we have 5 minutes left. Can we discuss the applicability of section 50C? Should, as a payer, I go into section 50C, apply the stamp duty rate and then work out the capital gains, then deduct TDS, or I do not go and straight go to 195.2 in such cases? The cases covered under 50C, I do not dwell into calculation at all. So that is open to the audience to discuss applicability of 50C. So we have 5 minutes. Can you please raise hands or unmute yourself and speak?
50C, can I speak, sir?
Yeah, sure.
Yeah.
The 50C, normally the stamp duty will always be in these transactions anyway going outside. They don't take less than that, I think. So always market value is much more than the stamp duty.
We had a situation where 50C was being activated. That is, the sale proceeds was less than the actual market value because of some title disputes. And it so happened that the seller was a non-resident. So should I, as a seller, take as a buyer, consider the 50C valuation and then deduct TDS, or should I take the consideration?
50C, it is very clear, sir. 50C has to be taken. Then if the market, whatever consideration taken is less than the stamp duty value, there is no other option. We have to apply that. Apply that. There should not be any doubt.
What Nilesh sir wants to tell is, because suppose the sale consideration is 2 crores and the 50C value is 2 crores 50 lakhs, then on which you should deduct TDS, whether on 2 crores or 2 crores 50 lakhs? Because you are making the payment of 2 crores only. 50C is for his personal assessment. That's what he wants to raise.
Can I interfere?
Prabhakar garu
Yeah.
cheppandi.
Sure. Can I yeah, it's like this.
Please.
When it comes to referring to section 50C, the first what we should understand is the consideration which is higher should be adopted for the purpose of your tax deduction or computation of capital gains. So it says the actual consideration or the documented value, whichever is higher. So that is the issue which has to be considered for all the purposes. Even 50C at times it may be lesser than the actual consideration. The actual consideration which is routed through bank, because that is the other issue. So if you can, and there is also issue of making some sort of a roving inquiries. So that also we should take some precaution when the sale or the transfer transaction takes place. There is a possibility of so many accounts being affected in order to accommodate the actual consideration. So that is the area where we encounter with our clients. We'll try to convince them to bring in all the related accounts to ascertain the actual consideration. Because later on, the department has so many other agencies which can support, which in fact support and provide all the data which is related to the particular SSC. So the SSC believes that he is most intelligent and he tries to keep away certain of the bank statements which also reflect the consideration movement. So we should be very, very careful when it comes to working out the capital gains, because they are hit by either 50C, 69, because other sections are also there. 69 is also there. That also hits us. So we should take abundant precaution and ensure that, see, whichever is higher, once that is offered, you are safe. So before doing that, you should also convince or impress the client. It is in their own interest that we are trying to work out the actual consideration, and thereafter. So what is to be deducted? So the even 195(2), that explanatory note, that also says that what is liable for tax, that has to be taken for tax deduction at source. And now, because of the prevailing situation where it is a faceless assessment and you need not physically meet the assessing officer, you have an advantage. Right. You can work out your capital gains, the actual amount that is credited. So credited to the account. Credited to the account is different from the income. So the income is liable for tax. Right. So the section also says the income that is liable for tax, and for determining the income, what are the relevant expenses that are allowed. Allowed is you have the cost of improvement. So cost of improvement also should be taken into account. Then work out your capital gains, then offer it for tax. Then there is no authority now. The assessing officer will try to interfere and a certificate is required. So those sections are dispensed with, because we are not in 1949 as rightly put by Mr. Sambamurthy. We are in 2020 and we are into faceless assessment situation. So at this juncture, you need not even knock the door of the assessing officer. You are the boss now. You can decide. And if there is any issue, yes, we'll counter it. We have every right to defend our calculations, and they are all referred to who is the authority. If the notice comes from whom, so to whom to be addressed. So all those things will be a follow-up action. For that, we need not cut short our professional responsibility in working out the real tax liability and advising the client accordingly. So this is my point of view.
Sure. Thank you.
I supplement Prabhakar sir, because there is tax neutrality. There is no revenue loss. There is no revenue loss, because even the assessing officer computes, if he is not finding any difference, then there is no tax loss or any revenue loss. In that case, there should not be any, because a assessing officer may resort to auditor only when there is some revenue loss. When there is no revenue loss and tax neutrality is there, where is the case for any issue?
TDS is only to deduct tax, which
That's
is
okay. I agree.
liability.
But the only thing is tax neutrality. What Prabhakar sir is telling, I also concur with that.
Fine. So it's 6:32 now. Over to both the experts we have on the panel, Mr. Rajan Prasad and Mr. Raghavendra Kumar. So the floor is yours, sir.
Now you decide, sir. Ever me first maatladte, ever tarvata maatladte. Both are ra ne.
Raghavendra sir, shall I complete first, sir?
No problem, please.
Yeah.
You stop sharing, na, Nilesh?
Yeah, sure.
ఉంచండి సార్ పర్లేదు జస్ట్
మీరు షేర్ చేస్తారా ఏమన్నా?
లేదు సేమ్ సెక్షన్
You want overall? Okay, no.
Like just explain.
Same slide 6.
Yeah. Sir, wonderful deliberation, sir. Okay, so more conservative views, more aggressive stance, all those things. Okay, I'll develop on my views, and of course, I say that each and every word which is used has so much of meaning in it. So we need not worry once we understand in the true perspective of the act. See, ultimately, we should not learn the law only because a sing officer is questioning us. See, and don't feel that I am offending someone, sir. Don't feel. It is my view, and just I want to supplement it. Okay, that's the first thing. So merely because we get notices from department, we should not be worried about at all. Reason is very simple. It means if any one of you can kindly share with me any one single case where you lost because you have deducted on net basis. I'm not saying safer side is definitely you have your own choices, gross basis, etc., etc. That is fine. Let us see what she says. So just some time back I told 195.1 it uses the word 195 or 198 it uses the word chargeable. I'm not still going back to other sections where some sections use the word income subjected to tax. This section use the word income chargeable to tax. And again, the discussion will be something else because the section use the word chargeable to tax. I'm not talking about subjected to tax. Subject to tax is something different. I will explain when I want to explain ATM. Recently added a dividend. Indo-Netherlands treaty versus India, US treaty versus India, Canada treaty. There they use chargeable to tax, subject to tax. Altogether, the game changes over there, right? So these sections use the word some chargeable under the provisions of the act. So far as this particular issue is concerned. So when the payer is making a payment which is chargeable, so the moment it is using the word chargeable, yes, what is the sale consideration? You can take the documented value of the cost of acquisition. It means if you have documented, Samu sir rightly told, Prabhakar sir rightly told, not right, it means logically, Sarang sir, different people express their views. And definitely I respect that the issues where they want to go by gross also, because the problems which they faced earlier, we cannot rule it out. But as per the law, what it says is you can take the cost of acquisition, as Mr. Ravi also told, sir, why can't I take cost of improvement? Yes, you have a right, but it should have been documented. As simple as documented in the sense that banking channels, etc., your proper bills, etc. So you calculate that one, then estimate the tax liability and deduct that one. So that is the first one. Second, sir, whether I need to give 54 exemption, why in that particular case 54 exemption has been given? For the simple reason that, again here it is using the word chargeable. What do you mean by chargeable? Chargeable after taking into so many exemptions, etc. But remember, TDS is to be done at the time of credit or payment, whichever is earlier. At the time of payment, if that person has already invested, for example, in 54, you can invest prior to the sale consideration also, sir. Correct, sir, Nilesh, sir?
Right,
yeah.
Right.
In those cases, that in that particular context, it has been given, sir. So suppose I am selling this property and already I purchased at least 1 year, within a period of 1 year prior to the date of transfer, then as a payer, you need to examine at that point of time, at the point of deducting the TDS, whether he has complied with 54. If he has complied, excellent, you can do. But if he says that, sir, with this money, I will use in 54 exemption, you are not liable to consider that into account at all. Some people say that, sir, I will invest in 54 EC. You need not consider. Reason is your point of deduction is at the time of credit or payment. At the time of making payment, has he invested in 54 EC bonds? Yes. If it is yes, then definitely. But 54 EC doesn't give a choice to you to invest prior to the transfer. Whereas 54 gives, 54F gives. So that is the case, sir. Then coming to, can I consider
just for 1 minute.
Yeah, please.
Yes, investment in 54, we should be very careful. 1 year prior to that only purchase, not construction.
Correct, sir. Purchaser.
That's because lot of people, what they are missing is even construction they are taking. That is not permissible.
Yes,
The
sir.
construction is allowable only after the sale only.
Yeah.
So in the case of prior date, it is only purchase and not construction. If you have purchased some land and started construction, that is not eligible.
Yeah, correct, sir.
Only purchase prior 1 year and purchase or construction subsequent to sale deed is allowed. So this subtle difference one should consider, because normally what we do, the client will come and tell that, sir, I have purchased land before 1 year and I started construction, whether I am eligible. By oversight, we will tell, okay, you are eligible. So that we should be careful.
I think, yeah, point taken, Samba. We'll...
Yeah. So this is the meaning of the word, sir. Then the conclusion is calculate based on the documented value. That is the first thing. 54, can you take or not? Yes, provided as on the date of deduction of TDS. The TDS is required to be done at the time of credit or payment, whichever is earlier. By that time, if the conditions of 54 are complied with, yes, again you are eligible. Then can I give set off of losses or not? No. Reason is very simple, because some chargeable payer is making with regard to this particular property. Then in such case, you need to stop giving effect to set off of losses, etc., because that is not under the gamut of this particular section. That is one. If you want to give all those things, yes, you can go for a little complicated route like 195.2. You can give and you get a certificate, or 195.3. Let the payer go to the department and get a certificate. That is a thing, sir. Then the next one is, can I consider 50C, or am I liable to? So because again, sir, Nilesh sir, or other team members, 50C, see here the section is the word some chargeable. Some chargeable means sale consideration. What do you mean by sale consideration? Sale consideration is actual or 50C, whichever is higher only. So you need to consider 50C also at this juncture only, sir. If our clients insist, say that, sir, you don't do that one, then yes, we need to go to the department. That is the only remedy available to us. That is, sir. Then at the time of so and so, what do you mean by rates in force? Rates in force, see, merely because this section is the word rates in, what do you mean by rates in force? 2 subsection 37A use the word rates in force. So as defined in the respective sections of the Act or relevant Finance Act or the DTA, whichever is more beneficial. But our discussion as of today is limited to only immovable property. Immovable property, 90% of the DTAs say that the rates as per your local laws. So the Indian income tax rates will only be applicable. That is for 195 subsection 1. Then explanation, because Ramamurthy sir are asking about explanation 2 to subsection. So can you just go to explanation 1, sir?
One,
explanation 1, sir.
Yeah.
Yeah, explanation 1 is copied from various other sections. What do you mean by payment? Where it is parked to the credit of the account of that person, a suspend account, etc. That is given. It means sometimes we credit saying that instead of Mr. Nilesh Vitnali, we will say that to the pay something like that. That is also deemed to be covered here. Then explanation 2, sir. I will explain a little bit their explanation 2. Yeah. Ramamurthy sir was referring, sir, what do you mean by this one? All residents, non-residents, whether or not, etc. This explanation 2 is inserted. It is on account of the outcome of the Supreme Court judgment in Vodafone judgment. So in Vodafone judgment, another passing remark given by the Supreme Court was, so where the non-resident, where one person is outside India, another person is also outside India, then the department, it means the assessee argued that, sir, 195 is only a charging, 195 is only a mechanism whereby we can collect the taxes. Can 195 go beyond section 1? Section 1, what it talks about, this section is called Income Tax Act. Section 1 subsection 2, if you see, it is applicable to the India. Whether India includes USA, it never includes. So one non-resident in USA is sitting and is making a payment to a person in UK with regard to a property in India. So how our Income Tax Act can go and catch hold of those particular persons? They are saying, so whether 195 can override section 1, that is the discussion which happened in Vodafone. Even prior to Vodafone, it happened in Eli Lilly's case as well as in GVK Industries case. GVK Industries case, the larger bench headed by Fariman, okay, So they beautiful judgments, sir. You just go through that one, where they held that generally the parliament doesn't have any right to make any law which has extraterritorial application. But merely because some of the sections are having extraterritorial operation, on that ground alone, you cannot held that that is ultra-vires the constitution. So generally, the law made by the government, parliament is applicable only in India, but merely because some of the sections have extraterritorial operation, on that ground alone, you cannot say that that is ultra-vires the constitution. So they upheld the wires of 195. They held that if an income is, if there is an element of income and that is chargeable to tax in India, then wherever you are situated, you are liable to deduct TDS. That is a judgment given in Eli Lilly's case. First time they are given, later on reiterated in ECIL case, and also in the other judgment which I just told you. So GVK Industries case. So to clarify the doubts, what they have added is the assessee argued that, sir, even otherwise, so Vodafone BV is situated and Hong Kong entity, Hutch is Hong Kong. So Netherlands entity is making payment to Hong Kong or vice versa, whatever, then how can they deduct TDS, or how can they get registration, getting a TAN number, etc., etc. They argued without prejudice to the main argument like that. That's why to put it rest, what they have done is, so once it is a chargeable sum, whether one non-resident, where one non-resident is making payment to another non-resident, the moment it is chargeable to tax in India, they need to deduct TDS. So we have a couple of cases which we handled. The more logical judgment, if you, someone wants to read the judgment, sir, you please go to the Clifford Chance case and Linklater's case. These are one of the very beautifully argued judgments. Linklater judgments in the tribunal only, it is argued for 16 years. Because when I'm writing the book, I realized that the tribunal has to give judgment within a period of 4 years. I conveniently forgot the word, where it is possible the tribunal has to give judgment within a period of 4 years. But Linklater judgment was given exactly after. So that is in that background explanation to us added, sir. So the next
Section 9 is amended only for that purpose, sir.
Yeah, everything is, yeah, yes, sir. Then the next thing is, sir, can you go to the next one, sir? 195.2, yes, just I will conclude in another exactly 4 minutes. Okay. 195, it says that when there is a composite sum and you got a doubt, then you need to go to assessing officer. This section is most of the cases, they use it in the cases where normally we pay to a consultant remuneration plus some daily allowances. In those cases, we pay something like, sir, 12,000 rupees to your consultant and 1,000 rupees as DA. Whether I need to do direct TDS on $13,000 or only on $12,000, because $1,000 is a pure reimbursement. Those cases where you don't know whether exactly 1,000 has been spent or not, those cases 195.2 will be resorted normally, sir. But yes, wherever you got a doubt, you can. But the majority of the cases, those cases 195.2 applications were made. And 195.2 is majority of the cases is used. It means you go to department and you take COG report. 195.2, what they have given, what applications have been received by department. So department received applications under 195.2 in this context, like machinery is purchased and installation charges they are paying. So machinery is a capital import, there is no TDS, and installation charges alone. So I will capitalize. Machinery is $1 lakh, $10,000 is installation, $1,10,000 everything is capitalized. It is as good as import because you are paying custom duty on $1,10,000. So why I should deduct TDS? So then they clarified that in Visakhapatnam Port Trust case, see, so far as IT Act is concerned, yes, you would have paid 1 lakh custom duty on $1,10,000. You would have capitalized everything, but so far as $10,000 is concerned, it is an income element falling under the scope of fee for technical services in the DTR constant fee for included service. So you have to deduct TDS under 195. If you don't know how much is towards installation, how much is towards supervision, because supervision doesn't require TDS. Those cases you go to a assessing officer, he will determine. It is not like, sir, whether a sale consideration versus cost. Cost is very clear. We can determine with the sale deed, then what for we are doing our practice, as simple as that. Definitely we'll get a challenge, but that should not stop us from exercising or doing a right job. So that is the thing, sir. 195.3 and 194.3 says that pay will approach. 195.4 says that board, etc., etc. At last, I will conclude 195.6 and 7. I just told you 195.6 is introduced in the context of LG case because they have hidden that, concealed the transactions. 195.7 to override in notified cases. Yes, whether it is a chargeable sum or not chargeable, you have to approach me. As of today, there is notified. So my view is, sir, determine the sale consideration, take the 50C also, sir. Then, so determine the cost of acquisition, give the indexation benefit, cost of improvement. Yes, if it is documented, if there is bills, etc. If it is genuine to your mind, do that one. Otherwise, don't take the risk. That is one thing, sir. And at last, before I conclude, so someone is asking, sir, what happens if the assessing officer issues me a notice saying that my buyer has to deduct TDS and whether he will be liable for interest, penalty, etc. No, don't worry about it all. As simple as that. Reason is very simple. Earlier in 2010, Hindustan Coca-Cola beverage case is there. What they have told is where you have deducted right TDS. Suppose you have not done whether gross or net, but the other person has paid, he has considered, then you are not liable for any penalty. Now 2020 Finance Act 2020 amended that one 40A1. If you see there, they have given where you are making so where you have not deducted TDS either when you are making payment to resident or non-resident, but the other person has considered that is in computation and he has filed the return. That's it. There is no penalty, but you need to suffer a interest component. So penalty, no need to worry. After amendment 2020, you can see 40A, and there is a parallel amendment in 201 and 220 also. 201 interest for when a person is deemed to be deferred. 220 penalty in the cases where 221 when the person is deemed to be in default, etc., etc. Those cases. So even if some by mistake you are not done, but the other person has offered, then there is no penalty, but definitely there will be a interest cost. So these are my views, sir. But I thank all of the participants for wonderful deliberations and sharing their experiences, sir. Yeah.
Thank you, Mr. Rajendra Prasad. Over to Mr. Raghavendra Kumar.
With respect to your 50C query, no, sir, whether we need to deduct a tax at 50C value or the actual consideration or document value, I also concur with Mr. Rajendra Prasad because the sum chargeable to tax, for that you need to take 50C value only. But I just share one, sir, here also, now, just I want to share one small case law, sir.
Sure.
Sir, you can see it, sir?
Yeah.
Sir, this is Hyderabad ITIT judgment, wherein they said that it's okay if TDS is made on the actual payment. Some interesting remarks they have made is that we are not dealing with the liability of the vendors to pay the taxes, but we are dealing with the liability of the SSC to deduct the taxes at sources. So, but my humble opinion is that I think taking the Supreme Court GE case into consideration, when the sum chargeable to tax, when you need to deduct tax on it, 50C is going to come into picture. So we cannot say that I am not the seller, or I am just a buyer. I will take the actual consideration. So that I think, in my humble opinion, I have a small difference of opinion about it. And with regard to this one, no, sir, it is not that every payment, if at all, if it is not approached to the income tax officer, it is not that every payment we are going to get a notice. So long as we have sufficient documentation in computation of the sum chargeable to tax, I think we need not worry much about it. But Rajendra Prasad here have a small issue. Say if we have one long-term capital loss and one long-term capital gain, when both the things have happened in the same year, with respect to the seller, I think we can take a chance.
Yeah, just I will supplement, sir. I will just add. Reason is very simple. If you see 192, there, of course, in 195, the similar paragraph is not copied. There, they have given where so the TDS should not be reduced on account of other components. So That is the reason why majority of the cases we are stopping for the long-term capital losses, etc. Of course, I'm telling you honestly, sir, if client is very aggressive, and of course it is defendable. It is not, we never done something which is not beyond the act, as simple as that.
Correct, because so long as we can
Yes,
say
yes,
that
yes.
there is nothing chargeable, there is nothing that the government has lost, I think we can take a chance. Sir, thank you, thanks a lot.
Can I come in for a second?
Yeah, please.
Yeah. Sarang,
195.1, the last sentence is deduct income tax thereon. That means that whatever I am paying on that amount only, I got to deduct, nothing else. That is my view. Secondly, with respect to the other part where whether we can deduct loss or not deduct loss and things like that, most probably it is a contentious issue. But if there is some other income chargeable to tax, then the assessing officer comes back to you and says, okay, you deducted lesser, you should have deducted more. Then I did not have to go back to that fellow and collect the amounts. Now he has gone away, repatriated the whole amount. I should come back to you and collect. That issue is something which is bothering me always. Thank you, sir.
Anyone else has something to add? Mr. Rajendra Prasad, you had something to say?
Yeah, just okay. Yes, sir. I just told about that Linklaters case, etc. So those who has a chance, you can go through that wonderful judgment, sir. There are two judgments. One is Linklater and another is a Clifford chance, where they talked about one non-resident to another non-resident when they are making payment. Of course, it is not in relation to immovable property. It is in relation to fee for technical service. I'll just explain what happened so that it is very easy for everyone to digest. What do you mean by explanation 2? Otherwise, the true perspective of 195 explanation 2 cannot be perceived and understood. So Linklaters is a very famous consulting firm situated in UK. A client in UK went to Linklaters. So Linklaters is situated in UK. Client in UK went to Linklaters and they asked, sir, I want to set up a company, a factory in India. Can you give me what would be my tax implications? So remember, in India, giving a simple tax rate is very, very always difficult. Reason is, for example, if someone asks me what is the tax rate on a company, we are clueless. Reason is 30% is there, 25 is there, 15 is there, 40 is there. There are different tax rates are there. So it is not. Then you have to keep on asking so many questions. Then they have given a wonderful 100-page document. For that purpose, they visited all those sites, etc., etc. Then they are given the opinion to the other party, the clients. Then later on, they approached RBI, the other client, whoever, whatever happened. Then at one point of time, the government of India came to know that Linklater has rendered service to that particular client. How? I'm not talking about that one, sir. Reason is very simple. Whoever has approached RBI for, sir, whether it has because it is an outbound investment for them, whether I need RBI approval or something like that, then they understood and they asked. At that time, they have given Linklaters report, all those things. Then the income tax department issued a notice, love letter to Linklaters, and they asked, and the assessee actually, sir, you have paid to Linklaters some $125,000 pounds toward this particular service. Have you deducted TDS? They argued, sir, what you are talking about? Because I am a non-resident and I am situated in UK, and this person is I am making a payment to this particular person in UK. How can you ask me to deduct TDS? Then they told, sir, our 195.1 is very clear. It says that where any sum is chargeable, then you have to deduct. So where any professional service or royalty or interest, where the underlying services are utilized in India, because the services are with regard to a plant which is going to be set up in India. So in that case, it is deemed that section 911 I am talking about, sir. It is deemed that income is deemed to accrue or arise in India. Once it is deemed to accrue or arise in India, it becomes Indian income. Once it is Indian income, it becomes taxable to everyone, whether you are a resident or non-resident or whoever you are. Once it is taxable, 195 triggers. 195 says that whether you are a resident or non-resident, you deduct TDS. As simple as that. Then they told, sir, we have not deducted. Then the next question, immediately they asked, sir, how Indian Income Tax Department can recover from me? Then they pressed into service DTIA. If you see India, you can DTIA. See the purpose of DTIA, if you see, the DTIA will be entered into for different purposes. Number one, for collection of taxes. Number two, for avoiding double taxation, for giving tax relief. At last, for collection of taxes also. It means if your person, it means your people, UK people has avoided Indian income taxes, then our assessing officer will write a letter to the board and the board will forward. Recently, 228 is also amended with regard to the same because they widened the scope. Earlier, they can issue only under 176 subsection 4. Now, they have enhanced the scope of 228. Earlier, some cases 176 subsection 4, other cases 228. Now, after Finance Act 2020, 228 became 228 and 228A became very, very powerful. So the department can issue notices and they can recover. So in that particular case, they issue notice and they recover. To clarify that legislative intent, they have given in explanation too, sir. So that one. But unfortunately, what happened in that particular case was, sir, last I will conclude, sir. Unfortunately, in that particular case, it was given even prior to this one, prior to 2010, the judgment was given. Those days, royalty or fee for technical services or interest would be taxable. Number one, if the services are utilized in India, that is called utilization test. Second, payment test. Third one is rendition test. The services should have been rendered on Indian soil. They have taken a plea that, sir, you have rendered the services on UK soil. That's why it is not liable for TDS. Like that, the department has, the assessee has taken that particular view. Actually, that particular view was taken by the assessee those days. But unfortunately, that case was argued for years. It was prior to 2010. In 2010, the Supreme Court, it has given its landmark judgment in Ishikawajima Harima Heavy Industries case. They have concluded 3 tests are always to be satisfied: rendition test, payment test, utilization test. If all the tests are done on Indian soil, then only TDS is attracted. To nullify that, first 2008 they amended, there is a loophole. Again 2010 they have given with services, only utilization test is required. So they have amended with retrospective effect from 1/6/1976 onwards. That is the time where royalty and fee for technical service definitions were introduced in explanation 916 and 917 of Indian Income Tax Act. So then what happened was this case was being argued. All of a sudden, the department lawyer placed this amendment. Madam, Your Honor, it is a retrospective amendment, so it is binding. So the tribunal told, okay, now law is settled, it is no longer res integra. So you need to apply the law, which is retrospective effect. I won't punish you for not doing TDS, but at least pay tax now. So they concluded by asking them to pay tax in India. So this is the story which happened for Linklaters case. Yes. I thank CTC for giving me this wonderful opportunity, sir. I thank all the team members who participated and who deliberated, really who shared your experiences, who allowed me to know more from the audience.
Thank you, Mr. Rajendra Prasad, and wonderful presentation, both the speakers, Mr. Raghavendra Kumar and Mr. Rajendra Prasad. And definitely the participation was really good. We would only encourage others also to please join in the coming study circles. Over to Mr. Sambamurthy for the vote of thanks.
Thank you, Nilesh. Rajendra Prasad garu, before I propose wholehearted vote of thanks, I just want to request, if it is possible, to put the case laws in the chat box so that the participants can take note of these things. If it is possible, please type down in this thing. So
what I will do,
shall
I send a mail
WhatsApp
to
group?
Shall I send a mail to you?
Even
WhatsApp group I will.
Even
No, WhatsApp group I will.
CTC group also, no problem. That would be better.
CTC group I will.
Coming to today's deliberation, again we have kick-started the study circle this thing, and main motto of starting Hyderabad study group is this only, because we want to share the ideas and what is the law, because what are the latest developments. And one thing I am telling friends, it is not possible for a single person to go to each and every person's office and discuss about these points. But it is always possible to meet at some point, now at least online, all the 33 people have participated. 33 chartered accountants are coming together and discussing over a issue and what are the latest developments and what are the trends we have to follow and what would be our way to approach future. That is more important. This is a concerted view we are getting, and with different opinions we are taking, and whatever best you think and whatever is correct you think, that you can follow, instead of beating in the bushes and just thinking that whether I am doing properly or not. When you know the public opinion, yes, some other people are also along with me, like that you can do. When I hear Rajan Prasad and PV Raghavendra, I always admire them for their patience and the deep dive into the subject, because I always feel I was reading about Arjuna in Mahabharata, that he could trace the apple without seeing any other things. We are all standing before the tree, seeing the leaves, branches, the tree, everything, and we are not able to see the apple. And Rajan Prasad and Raghavendra have come today to show how to see the apple and hit the apple and eat the apple also. So I thank Rajan Prasad and Raghavendra for readily accepting to lead the group discussion. I wholeheartedly thank all the participants who have come and joined and participated. It's a beginning, my friends. I request all of you to keep coming and joining, and what Nilesh told in the beginning, the same thing we want to continue. Every month we want to do at least one income tax and one GST meeting, study circle, so that we can know about the latest developments, or some things we may be missing because of our busyness, because our office is working with skeleton staff, everything we have to do, and we have become from peon to president. That means we have become departmental store. That means you are the peon, you are the president. From beginning to, as you started in the practice, when you started practice, you are all alone doing everything. The same thing is happening now. The staff are not coming, and when they come, how many of them they will come and how much they will deliver is a big question mark. So we have to imbibe technology. At the same time, you have to update your knowledge also. And updating knowledge should be in such a manner that what is happening in the professional circle, that also you should be aware. In the same manner, in the legal point of view also you should take care. So all these points we will try to cover, and I on behalf of HSG as well as all the participants thank Rajan Prasad and Raghavendra for accepting and delivering a wonderful conclusion, because I thank all the participants for participating in this study circle meeting, and I only request that keep coming and participate in this thing, and we will try to share as early as possible the study material also, so that we will read and come, so that the deliberations will be more fruitful. Thank you very much. Nilesh, you can close.
Sure. Thank you, everyone. And for those who are still not members of HSG, we want you to become members as soon as possible, because henceforth we plan to keep the study circle meetings only open to the members of Hyderabad Study Group. So that will help us also plan better once we have a large number. And once again, thank you, Mr. Rajendra Prasad and Mr. Raghavendra Kumar, for a fantastic presentation. See you. Good night, sir. Thank you.
Thank you. Thank you very much, sir.
And also, participants, please suggest the topics for your forthcoming study circle meetings so that we take up live issues for discussion. Thank you.